When you've been in the business as long as I have, sentiments change over time. And a product I want to talk about today is the reverse mortgage. And today I have one of the best in the business joining us to talk about the products, the misconceptions people have. Shan from Equitable Bank, welcome, and thank you for taking time out of your day to join us today.
Thank you so much for having me, Vince. It's always a great opportunity when I can come out and talk to people and educate them about the reverse mortgage. So pleasure to be here. Thank you for having me.
Well, being in the business as long as I have, I always wasn't a big fan of the reverse mortgage product. Back in the day, qualifying for a mortgage was a lot easier. Folks that transitioned from salaried income to retirement income, which is lower, were still able to secure mortgages based on an equity basis, good credit, lots of room on their home values to get mortgages and lines of credits. And with OSFI's changes 6-7 years ago, by bringing in B20 and the stress test primarily, people now have to qualify based on their income to secure any type of mortgage product. And it's created a void for folks looking for money that are older, in retirement, and it's created an interesting opportunity for reverse mortgages. And my sentiments changed quite a bit because now there's an opportunity. Now there's more players. Before it was just a little lumpy product by one lender, and competition has really changed that field. And we're seeing more innovation, more flexibility, more competitiveness. And I want you to help me understand what are some of the misconceptions out there on the product.
So let me start off by saying, Vince, you're not the only one who has had a change of heart towards reverse mortgages. Okay, let's talk about why reverse mortgages are getting popular these days. A few things, a few factors here. We are living in Canada in an aging demographic. Okay, did you know that there are more Canadians over the age of 55 than under 15? Just think about that for a second.
That's incredible.
There are more Canadians over the age of 55 than under 15. Take a look around you. I tell people, just go, whether it's to your church, the local grocery store, community, any place, look around, there are older Canadians. These Canadians, who are homeowners as well, right, have $1 trillion of equity sitting in their homes. $1 trillion. And some of these people, and we can talk about certain situations, how do you tap into some of this equity? Okay, another factor, retirement, people are depleting their retirement funds. I used to be a planner in the early 90s. Did you know when we did a plan at that time for a client, we did it till maybe the age of 80 or 85. Today at 80 or 85, people are living large. And when you live longer, life expectancy in Canada is tremendous. We live in this great country. When people live longer, what do you run out of? Money. And we don't even need to talk about inflation, interest rates, what that has done. So those factors by itself, that we are living in this aging demographic, right? People need access to funds. A reverse mortgage is an amazing solution for all those Canadians.
We've been seeing just an increase in this request for a number of different reasons. And we've actually dedicated a website for the reverse mortgage product because we're just getting inundated with folks looking for more information, trying to get a grip as to, does this make sense? Because there's still that hesitancy about the product itself, right? The misconceptions of, there's a loss of ownership, it's too expensive. There's different things that you could probably get into, but it really created an opportunity for us to point people to a dedicated site just for reverse mortgages. I don't even like the term. I know in one of your presentations, you flipped it on me and you said, Vince, the reverse mortgage product is really an equity release product, right? Which sounds a little bit more positive as opposed to the whole negative, going backwards type of thing. So maybe you could shed some light on some of these misconceptions, because we got to get rid of them. We got to fight through them.
Absolutely. So it's interesting you say that, Vince, because in the UK, this product has been there for over 100 years. And they, as a matter of fact, call it an equity release program. And I don't care whom you talk to.
So that's where it came from.
That's where it comes from, exactly, right? And if you go and ask any Canadian, would you prefer to have an equity release or a reverse mortgage? I'm pretty sure 100% of the people will say, I'll take the equity release rather than a reverse mortgage. So it is tapping into the equity. I mean, a reverse mortgage is a very simple solution. Let's talk about one of the biggest misconceptions out there, which sometimes even brokers, lawyers, educated people think that the bank owns the home. That's the biggest misconception out there. Equitable Bank is not in the home ownership business.
You're bang on, because a lot of people think they lose the house.
Absolutely. Yeah. Absolutely. You know, I tell people if you get a mortgage from TD Bank or Scotia Bank, TD nor Scotia own your home. You own the home. Scotia Bank has interest on the property, of course. It's exactly the same thing. With a reverse mortgage, you have full ownership of your home. So that's the biggest misconception out there. And we need to break that myth that you are in total control of your home. You own the home, not the lender. You're tapping into some of the equity, just like taking a regular mortgage.
Well, that's one of the misconceptions. A lot of people also don't realize that there's options and flexibility to these things, because people think, well, interest just compounds, and at some point this mortgage is going to be worth more than the house. What happens? Like, can you shed some light on that aspect of it? Because I think people misunderstand how the actual compounding works and how little is advanced relative to a standard mortgage at 80% loan to value.
Sure. So reverse mortgages, how it works is we look at the equity in your home. We look at one's age. You have to be over the age of 55 or better in order to qualify for a reverse mortgage. And based on your age and the amount of equity you have, we lend a certain portion out. Let me address how you can take this money out. You asked about that. There's a couple of options. You can take it as a one lump sum. By the way, proceeds are tax-free as well. So there's no implication on CPP or OAS or any other income stream that you have, right? You can take it as a lump sum, invest it, do whatever you need to do, or you can take it in portions. You can say, similar to a line of credit, you qualify for, let's say, $300,000. You can take 100 today, right? Come back later on and take out 10, 15,000 as and when you need it. Or you can set it up like an annuity, whereby you can say, I want an income stream of getting $3,000 on a monthly basis. We can set it up that way as well.
And if you really think about it, it's really like a refinance.
Sure.
Right? And people need to start thinking through this process. Don't complicate it. It's simple. It's a refinance, and the benefit is the payments are optional.
Correct.
And can you talk a little bit about that? Because I think people don't realize that if you do have funds and you do have income, you could make payments to the product, correct?
Absolutely. Absolutely. So reverse mortgage works is payments are optional, as you said. So let's use an example of you own $1 million home today and you draw out $100,000. Our rates are extremely reasonable in the reverse mortgage space, currently hovering between 6 and 7%. If you take out $100,000 today, what you will owe after 5 years without making a single payment would be approximately around $140,000. Now think about this for a second. Today your home's worth $1 million. You owe Equitable Bank, let's say $150,000 in 5 years. You tell me, what are the odds that your home is not worth more than $1,050,000 in 5 years?
Well, that's where the actuarial science kicks in, right? And you start seeing that there is an appreciation to your home in most cases over the long term.
Absolutely.
Right?
Absolutely.
There's dips and stuff.
Sure,
We're seeing it today.
Yeah.
But at the end of the day, the amount that's being borrowed is nominal relative to the full value of the home.
Correct.
So you are still gaining appreciation on the property.
Absolutely.
To your point, right?
Absolutely.
Like, you're not losing equity. You are avoiding making payments, which is a cash flow issue in most cases.
Correct.
Now, Shan, one of the things that really moved me was a story you told at one of my presentations. I just met you this year, and I found your presentation to be one of the most moving ones I've ever been in. And I've been doing this a long time. I've seen a lot of folks doing presentations for institutions and stuff, and I think Equitable Bank's got a winner with you. And I hope you get rewarded for that. But I want you to talk about the story of the lady who was caring for her husband, because I'm getting goosebumps just talking about it.
You know, there's always an interesting story with a reverse mortgage because it changes people's lives. This particular story, I know the one you're referring to, is gives me goosebumps as well. As a matter of fact, story goes like this. Let's call her Mrs. Smith. Mrs. Smith had lost her husband a few months before her mortgage came up for renewal. And she gets this renewal notice from her bank. And sadly, her interest rate was, as you know, rates have spiked. Her payment was going up from $800 to $1,200. And she was not able to make this increased payment. What does she do? Just like any other Canadian would do, she goes back to her bank. She's been banking there for over 45, 50 years, I'm assuming. The bank was trying to help her out, and the advisor there had said, let me look into it, Mrs. Smith, and see what we can do. And unfortunately, in 2 weeks' time, she got that dreaded call from the bank saying that, Mrs. Smith, unfortunately, there's nothing we can do, but we can offer you a renewal. That's not
Higher
going to
rate,
help
of
her.
course.
You know, how is that going to help her? So Mrs. Smith basically had two choices at that time, and I guess she could have gone and got herself some employment. By the way, she's 72 years young and just recently widowed, as I mentioned. She can go and get a job to make up this difference. Or her other choice was possibly to sell her home. And sadly, she had made that decision to sell her home after living in that community and in that home for over 45 years. A week goes by and she goes to church on a Sunday and she meets this lovely mortgage broker at her local church. Now, don't ask me how a mortgage conversation comes up at church. Maybe it was that fellowship after church. Yeah. Anyways, she had mentioned to this broker about her situation, and the broker said, Mrs. Smith, you don't have to sell your home. There is a thing called a reverse mortgage. Have you heard about it? And the first thing out of Mrs. Smith's mouth was, yeah, reverse mortgage, that's a bad word, right? You know, they own the home.
It's a misconception.
Exactly. This broker had done a phenomenal job of educating what a reverse mortgage is all about. And the rest is history. Mrs. Smith is still living in the home she loves. She took out a $300,000 reverse mortgage. But that's also not the end to this story. After the deal was funded, Mrs. Smith calls this broker back in a couple of weeks and shares something which was extremely powerful when the broker shared it with me as well. It was the fact that she said, I wish someone had told me about this solution a year or two ago. Because when my husband passed on, the last year, I could have made his life and my life so much better. Why? Because we were struggling with our cash flow and we were having just only one meal a day. I wish someone had told me this before. She had also gone to say, I'm convinced that it is my husband who placed you in front of me so that I don't have to go through the same fate that what he did.
I'm getting goosebumps.
You know, that's a very powerful story, and majority of the times, if we are helping those types of individuals, it's about being able to live in the home you love, and it's about tapping into some of your equity.
And you know, Shan, what's interesting is, you know, I've been dealing with an elderly parent who's transitioned from his home into a retirement, and you know, the last year has been difficult because as parents want to age in place, it gets expensive dealing with PSWs, dealing with the support, you know, changing up the home, reconfiguring it. It's expensive. And those that don't have the resources to do it, you know, if they're not aware of these type of solutions, they're kind of stuck, right? And they're having to make decisions that they regret and they're not happy, and creates a lot of anxiety. And I think the purpose of this today is to educate and to let people know what type of options are out there. Sure. Because this product is something that I believe is revolutionary. And I say that because there was a point where I didn't like the product. And now that I see the value of it in a time and an environment where credit is so tight and regulators, lenders are restricted from having to do any equity type lending, this is a powerful solution because it can change somebody's life. It can make things a lot better for people.
Sure.
And, there's not only the people that are struggling in age, but there's also the other issue that everybody's dealing with, the white elephant in the room, and that is affordability. Parents are seeing their kids struggle to get into a home.
Yeah.
And the reverse mortgage has also helped them pass on some of their equity and call it a living inheritance.
Absolutely.
To help folks buy a home.
Absolutely.
How many of those situations are you seeing? Because I've seen quite a bit.
Sure. Early inheritances, it's becoming more and more popular. And, it's interesting you bring up the fact that we can help the Mrs. Smiths of the world every day. Those are people who are sort of desperate. They didn't have a choice. But that's also changing, right? Over time, more and more affluent Canadians are utilizing reverse mortgages, right? And a great example which you used just now was affordability for children. I use the example of my own son. I'm proud to say that he graduated from McMaster. He's an engineer, landed himself a really good job at a top engineering firm in Canada. You think he can afford to buy a house? He has a decent income. If he comes to you, unless the bank or mom and dad help him out with a down payment.
Pressure on you now.
He's gone to the house, so we are empty nesters right now. It's so people have to step up to help the next generation. So early inheritances are becoming bigger and bigger, right? And it's a great way to pass on some of the equity that you have to your children while you can see them enjoying this. Why was it not done in the past? Because of all these stigmas and misconceptions of the product, right?
On the misconception front, because something just came to mind, and that is the negative equity guarantee,
right,
and spousal death guarantee,
right?
Because a lot of people think, well, oh my God, if one of the couple passes, an event has to take place where they got to sell anyways. Can you talk a little bit about both of those? Sure. And how these products have been so innovative over the years that they've addressed these issues?
Yeah, definitely. I think one of the things is the stigma comes from the US about, the banks getting involved and going after the estate to recover their funds. And that there's a part of that which is true in the US because these regional banks went in second, third position. And when the whole housing meltdown happened, they were trying to recoup their money from the estate and from the children. Now in Canada, it's different. We offer two protections. The first one is called the no negative equity guarantee. This is an excellent protection where it sort of gives peace of mind to children. If mom and dad take a reverse mortgage, and let's say in 10 years' time, they owe $1 million to the bank.
Or they live to 120.
Or they live to the 120, right? And they owe $1 million to the bank. And the fair market value when they decide to sell that home in 10 years is only $800,000.
Very, very rare possibility.
Absolutely, because we lend based on age as well. Yeah. It's a highly unlikely event. However, the bank does give a guarantee saying that we will not be going after the estate, that our bank will absorb the loss. We are a bank, right? We look at these. So that's a no negative equity guarantee. That's the first one. The second one is also an amazing piece of protection. It is called the spousal protection. People don't necessarily seem to realize this, but you'd know this is if someone comes and gets a mortgage with a husband and wife, you qualify. If one spouse passes on, technically your mortgage is in default now, right? That bank they're not going to kick that person out.
Rarely does it happen.
Rarely does it.
But technically, it could be.
It could be.
And covenants change.
Yeah. And if they have a line of credit, I've seen situations where all of a sudden they'll change it into a mortgage, they'll demand a higher payment, so on, situation. But with a reverse mortgage, if both spouses were on title when they took the mortgage out, God forbid, when one spouse passes away, the other spouse can continue to live in the home they love. Nothing changes to that contract. So that's the spousal protection. And we've had...
It's valuable because it provides peace of mind too, right?
It absolutely provides peace of mind. Absolutely provides peace of mind.
Shan, on this note about the unfortunate event of death, I have a case right now where we did a reverse mortgage for a client, and both folks passed away during COVID, and really sad. And I'm dealing with the daughter who's trying to deal with it, and traditionally these products give the estate 6 months to settle their affairs. What I found very interesting is that there's a high degree of empathy by the institutions to understand that the courts are backlogged, dealing with probate and estate issues are taking longer than ever, and they're providing a lot of latitude because it is a tough situation. And one thing that came to mind was how appreciative the daughter was in this particular case. And can you talk a little bit about the process at the end of this exercise, if it goes to the full extent of what this product's intended to do?
So to answer your question, that's basically case by case. I mean, we do give them 6 months. Having said that, if the estate is working with us, we do understand that probate could take way longer than a year. We will absolutely work with the estate.
Yeah, and to your point, that's what they're doing. So just keep us up to date, put us in touch with a lawyer,
Definitely.
Let us know what the process is at, and they're not really forcing anybody's hand.
Absolutely. I mean, we want to work with them to get resolution on this one. So as long as the estate is working with us, interest does not stop accumulating at the date of death. It still continues until the date of settlement. But we will definitely work with the estate on that one.
Shan, one of the more interesting scenarios is, people are working, they have their 2, 3, 4 vacations a year, they retire, they want to travel more, they want to buy property abroad. One of the things that I've seen lately is a few people using the reverse mortgage to buy a vacation home down in Florida, Arizona, Mexico. Are you seeing an uptake on that?
Sure.
Because not to have a payment in a foreign country dealing with foreign exchange is also a benefit to dealing with that reverse mortgage.
Definitely. I think some of the people who have really sort of got their mindset changed around reverse mortgages is realtors. Previously realtors used to look at reverse mortgages as maybe because of lack of education or the fact that a reverse mortgage entices people to stay in their home. And a realtor's objective might be to get them to sell their home. So having said that, I think they have come to the realization that they have all these clients who are sitting on millions and millions of dollars, and they go and ask them a simple question. How would you like to, maybe make $3,000 more on a monthly basis, right? It's not for everyone because now you are borrowing against your home, so it's leverage investing. However, we are seeing lots of that happening and people taking out reverse mortgages so that they can purchase another property.
A couple months ago, you brought up a scenario, and I didn't even think about this, but there are people that use a reverse mortgage for purchases. Mm-hmm. I didn't even think of that because I'm usually thinking about aging in place, but there are people downsizing or right-sizing, and you got land transfer taxes, you got real estate fees. People seniors aren't finding a lot of specific products for them, and they're maybe going from a 2-story to a bungalow because of restrictions on mobility. How does the whole purchase arrangement work?
So it's interesting, when reverse mortgages were introduced, it was not necessarily meant for purchases, but as you said, like the product has evolved. I've been in this business for a while, and the amount of purchases that I'm seeing right now, it's tremendous. Like, that we can help some of these Canadians over the age of 55 to purchase. So how it works is it's very simple. I'm just going to use a very straightforward example. They had a home which was worth $1 million. They had an existing mortgage of $300,000. They'll net $700,000.
Yeah.
Now, they are right-sizing. As I use the word right-sizing, now no one necessarily downsizes, but they still want to stay in the same community. So they come to you because they purchased an $800,000 home. They're short of $100,000. Now you tell me, you started off the conversation saying that you've been here for longer than an amortization schedule. Would you be able to help these people if they have CPP, OAS, and a pension to get a $100,000 regular mortgage?
It'd be tough.
Having said that, you can offer them maybe possibly a $300,000 reverse mortgage.
Don't have to take it all at once.
You know what's ironic is this. is those clients, once they sort of get to understand the fact that they were short only 100, however they qualify for 200, the chances are 50% of the time they'll settle for a reverse mortgage of 200 and bank $100,000 so that they can have a better lifestyle as well. If not, they were just taking all their equity which they got, just dumping it into another property. This way, they have some money in the bank as well.
You know, there was a time when I wouldn't see many of these requests. This is going back 7, 8, 9 years ago. Now we're seeing them in abundance. They're coming in. They're more open to the concept. It's an education. And I think the key here is if we can help people with an additional solution, and it gives us an opportunity to provide another tool for them to come up with options and consideration to make their life easier, more enjoyable. People are living longer.
Absolutely.
They want to age in place. This is a great, great solution. And I'm really excited about having a dedicated website that, you know, specific for reverse mortgages. It's reversemortgageteam.ca. We got dedicated team here to help these people out. I'm excited about it because, you know, having done this as long as I have, I want to be a full stop shop where I could do somebody's first mortgage and I could do their last mortgage. And this product suite and what Equitable Bank has done, adding this to their, you know, shelves of products is unbelievable because it really provides a great alternative to selling, being forced into something maybe they're not really comfortable doing. And usually seniors should be rewarded. They've done a lot. They've raised families. They should have something that they could be proud to do and stay in if they need to. And this product, I think, does a really good job of that.
Absolutely. I mean, if there's one thing for your audience, which I'd like to say is, you know, learn more about reverse mortgages. It's not a bad word. You know,
No.
People think it's a bad word. It's absolutely not a bad word.
Maybe equity release should be in the market.
There you go. Maybe we should.
The UK is on to something.
Yeah, exactly. So, you know, talk to people like you who understand this and get a better understanding of it. And, you know, it's a tremendous opportunity for you to be able to tap into some tax-free cash from your property, because you cannot go to the grocery store and say, take a piece of my kitchen sink to get some groceries. However, you can tap into that through an equity release program such as the reverse mortgage, and you know, live life on your terms, live comfortably, age in place, and live in the home you love.
I love it.
Thank
Shan, thank you so much for coming in on Family Time to do this. I really appreciate it. I'm really looking forward to helping more and more people with your help. And thanks again for coming out.
Thank you for having me. It's always a pleasure to be with you.
Appreciate it.
Thank you.